Afternoon, everybody. This is Dennis Roll with the Active Trend Traders. Welcome to Making Money Trading Stocks and ETFs. Thanks for joining us today. I am going to be providing at the end of the session, for those who did join today, I found a really awesome book on that I'm going to be sharing with everybody. And where is that book? Of course, you can't find it every time you... but it's a book on the Bible of day trading. And what makes it kind of a fun thing is this Bible on day trading was written back in 1919. And it was written, there you go. And it was written by Richard Wyckoff. And it's 1919. So I'm going to provide you a copy of this when we send out the email with the links to the recordings. I'll provide a link to this so that you can get into it. And one of the things that I encourage everybody to do is take a look at this book, not so much from Wyckoff's process, because it's totally different than the process we have today, but from a aspect of the psychology that he used back in the day, if you will, to actually day trade. And literally, this guy would day trade means scalp an eighth of a point, a quarter of a point, a half a point. And his idea and his concept was that if you do that with enough shares, you can gain somewhere between $100 and $200 a day doing that, which equates to a couple $1,000 per month. And back in 1919, that was a pretty good living. So I'll share that with you guys for joining us today. So I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay for trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. Process of doing some just not so much changing our tactics as much as refining our tactics. We continue to do that on a regular basis for active trend trading. We want to continue to grow towards being more strategic so that it's a strategic trading system. I probably has a little bit to do with my naval background and wanting things to be strategic. Remember, we control how we trade. The market controls how we get paid. And I love getting emails back from the premium members saying that, where they let me know how they got paid for a particular trade. And that's always makes my day when somebody comes back and says, hey, I made this much, or hey, I had a successful trade. Absolutely phenomenal. I really appreciate that feedback in the emails. The objective of how to make money trading stocks and ETFs is basically timely, actionable intel review at the end of the week. A market review, basically what we're doing, we're having a violent earnings reaction. As if you were following Facebook, you know how violent it can be. Facebook had its face ripped off after they reported earnings, dropped 24%, which is about a little bit over 2 times the amount you would normally get a big move on a stock like that, but 24+%. The markets appear to be wired to a hair trigger reaction. We saw that reaction today in BABA. If you're trading BABA, we saw that. And what was the reason why BABA had its sell-off today? Well, because Alibaba finally came out and said, oh, we're going to do our earnings on the 23rd of August. And there had been rumors it was going to be the 2nd of August and then the 15th of August. And finally they said it'll be the 23rd. And people said, oh, okay, so the anticipated earnings run on BABA has now slid a couple of weeks, which is good. I mean, it still gives more opportunities to ride that puppy in. So Stocks ETF performance, we talked about that. We're in a bonus trade on HTHT. HTHT does get hit when BABA gets hit, but we'll take a real quick look at that. And remember, you've been given the keys. Now learn how to open the door. Here's where we're sitting about 9 o'clock this morning, up about 18% on the active trend trading. The markets, the NASDAQ Composite, and the Russell are the strongest performers for the year, and just not a lot of pullback in any of those. Here's where we're sitting on the 3 strategies that we have. Next year, we're going to be, moving into the end of this year, we're going to be going to just 2 strategies. But the entities within these 3 strategies will be the tactics that will be inside the 2 strategies. One of the strategies is going to be wealth building. The other one's going to be income. And then the tactics that were used right here will be in each one of those. Trying to keep it simple. Still good success here with the go no-go table that comes out to premium members on either Sunday or Saturday or Sunday, and we put out there define exactly what we're looking for in individual entities. And often you'll find a really great trigger points inside of this, such as like LABU, called resistance at 115. Look to trade LABD, which is the inverse if it tops, if LABU tops out. It did, and so that way our premium members, you can basically plan your own trades and plan them around this. And so. And so I sure will, Susan. We'll roll along. I got a couple of things that we'll look at. Here's where we're sitting. Got whacked on the Tesla trade with the strategy 3 position, but fortunately we had done very well in this, and so we're still up nicely in our strategy 3. Strategy 2, I'm holding this Tesla spread. It got taken out today, but I'm now holding BABA and calls that I'm going to have to be rolling into a higher, into the week of August 24. Now that they have identified where the when the actual earnings will be. We also do have a full position on BABA now, and again HTHT, we got into that about 41.48. And it's ricocheting between 40 all the way up to 40, a little bit over 42 yesterday. Anticipating a real nice breakout on that. Gold, we have talked about gold. We're in the place on gold where gold should rebound if it's going to maintain its seasonality. In the last week to week and a half of July is where on each, the 15-year pattern and the 40-year pattern is where it hit its low, and then went into a rally through August, September, into the early part of October. That, I'm waiting to see, is that going to happen this year? At this point, we don't know. But let's take a look at the charts, and this is going to come fast and furious, guys, so stand by. So here we are on gold. Gold is what I was talking about. It appears like we are trying to hammer out a little base over here. The problem I have on a daily basis is we actually have no reversal candlesticks on the daily basis. TSI has started to tick up, positive divergence on the daily basis. Weekly basis, I have a strong support level at just below the 115 level, about 114.70. What's missing from this equation? From what I'm looking at right now is TSI is down where it tends to pop back up and move back up. Has not made that positive turn as of yet. So not a really good strong candlestick on the weekly basis either, although we could consider this candlestick to this week's price action to be a inside week which is oftentimes an indication that a rally is not far off. Our market forecast has got down here, hit its three-line cluster down here in the oversold condition. Normally when that happens, somewhere between 1 to 4 trading periods, in this case weeks, would happen until we actually sold off. I have to check something. Okay, good. Make sure I started good. So SPY. Just take a look at how the individual entity. It broke out of its resistance, but it still has a further higher resistance above it. It has not gotten through that yet. Today's action on SPY is very bearish, at least in the short term. We had a bearish harami yesterday, and now we're following that up with a bearish engulfing as of right now. It doesn't mean I'm going to jump to the short side, but just be aware we could get a more serious pullback, and that would mean a pullback into like the 50 or even the 100-day moving average. As a worst case, we'd expect at least a 50% retracement, which would produce about 276, excuse me. QQQ. Okay, QQQ, a little bit stronger sell-off today. We're closing, looks like we may close below the 20. TSI rolling over here, and also TSI on the weekly, kind of giving us a little bit of a double top with a negative divergence, a shooting star type candlestick on the weekly as of right now. And then IWM. IWM, there we go. Similar type situation. Weekly, very congested, kind of a topping type action. We say we did push up close to the 170 level, negative divergence, and it's now rolled over. If it breaks and when we get a close below the 50, that may be a sign that we're going to pull back even more. Where it's to 162.70 looks like a good spot. Below that, we're probably looking at the 100-day moving average. That's where we'll be looking at. So one of the questions we had was, as you saw on the Qs, which of course goes with the NASDAQ. Excuse me just a second. The other day. But here, take a picture of the NASDAQ. Now let's go over here and take a look at our buddy Facebook. Okay, Facebook had its face ripped off. I mean, this is down from the close on Wednesday. This went down. Well, as of today, well, let's just take the where it opened at. It was down 19%. And now we're down 20%. So that's a pretty significant fall in Facebook. It is a level of support. I'm not going to be a buyer here. Anytime anything rips through the 50-day moving average like that on extremely high selling volume, that often means, hey, this is going to be looking for a setup for a downside trade on this particular entity. And we'll see how the price action works out. So you can see, this week's price action took out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 weeks of upward price momentum on Facebook. So that's impacting the NASDAQ. What else is impacting the NASDAQ? Well, our old buddy, let's see how bad Netflix is still in FLX. Excuse me again. Okay, as we can see with Netflix, it too basically sold off after earnings last week and fell to the downside, fell below the 50, came back up and tested the 50 same day, then fell back below the 50 on, this looks to be as in Thursday of last week, and then is currently living below the 50, bouncing between, approximately the 100-day moving average and the 50 and or 8. Price action today, it is holding right there at around the 354 level. Don't know if I want to get long Netflix at this particular time until we get some, from a positive standpoint, the TSI daily standpoint has gotten down here in the oversold condition. So it may, we may get a more significant bounce. But again, this is one of the FANG stock. This is one of the ones that is very highly touted or has a large percentage on the NASDAQ. So it's down. NASDAQ is saying, hey, it is impacting GLGL. Google. What it's doing. Okay. Daily basis. It actually gapped up with earnings. Good earnings report. However, what are we finishing today with? A bearish engulfing. And you can see this long wick on a weekly chart is saying that's where strong resistance is going to reside for a while. So we may get a pullback, into a more significant pullback with Google. Again, impact negatively on the NASDAQ. And Amazon reported tonight. And you can see, Amazon actually reported, did okay. Let's see, they reported, when did they report? After hours on the 26th, which was last night, we get a gap up to start the day, and then price action has come down for the rest of the day, moving down. TSI running down. TSI on the weekly chart, negative divergence. And so what are we looking at is for the biggest stocks in the NASDAQ are all getting basically whacked and falling. Now, they're not, some of them are falling more than others. Of course, Facebook is the one that is basically really tearing down tearing it down. However, the other ones are not pulling their weight to hold Facebook up and or hold up the NASDAQ. So, as we said, take a look over at the NASDAQ or the Qs, and you'll see a very, I would say that the reason, this looks the way it is primarily due to Facebook. And then the contributing factors are the other entities of the FANG stocks. So, good question. And thanks for asking that question this earlier, Jim. And let's see where we are time-wise. I think we're okay. So I'm going to go in reverse order. I'm going to go with the stocks that you guys want me to take a look at. APO, Apple. Yeah, it looks pretty similar to Apple's got earnings when 7/31, which is next Tuesday after market, and that may if Apple basically craps out with earnings, that could actually put more pressure on the NASDAQ and the Dow and the S&P to pull back even further. So kind of an interesting scenario. And what that's going to do for us if we're trying to set up other trades that are based on earnings, it'll make it more challenging to get a good earnings run on some of the other type of trades. So, okay, not saying it's impossible, but I have to really watch it. Intel, you want INTC, right? Gary? There's Intel. Oh, okay. It speaks for itself. You get a fall out a bit on earnings. How much of a drop was this? It's always good to know how big of a drop it is. And so we're looking at about 8% drop so far, but it does drop us below both the 100 and the 200-day moving average. That oftentimes is looked at as something that is very, very bad, which could in fact lead us even lower. So you can see here we have dropped the 40. TSI looks like it wants to fall more, and looks like it has some good support about between 42.50 and 45. And that may be where it's heading. We shall see. Okay, BTR. What is BTR? Okay. We're seeing a theme here. Okay, after earnings, when the earnings are not, coming out as expected, or they're getting whacked on it, the stocks are being hit to the downside, as we can see here, big hit. One of the things is you're assessing and evaluating these stocks that have basically selling off with earnings, is how many of them are staying within 10% of the close on just prior to earnings. As we said, if it is not unusual to see stocks get hit and down 10% or so. It is more significant if the drop or the gain is above 10%, and that's more significant in a longer term health of that entity, like in the case of Facebook. Facebook got hit 20%. Well, that's twice the outside the 2 times the amount that would kind of be considered kind of a normal range of plus or minus 10%. That's one of the reasons why the rule of thumb is plus or minus 10%, and that way and that's why people will say if your stock is not up at least 10% or more going into earnings, get out of a part of the position, because you don't want your winner to turn into a loser. So real quickly, where'd you go? There you are. Susan, you got a lot. I'll tell you what I'm going to do. I'm going to do as possible STOs. I don't know what STO puts in WSF for call selling. I don't understand that. I will at PayPal. Coming down, PayPal looks a little bit stronger. Where's it coming to rest at? Right at the 50-day moving average. That's all positive. So, that as itself, I don't like that this is a big sell-off candle, so I wouldn't necessarily want to be buying there, but it is at a level that makes sense for you to be able to buy. And I would like to see a little bit of a reversal signal like we have down here, but this is a real nice sell-off. Where are we at with regards to, excuse me, with regards to the fib trade retracement? Okay, you are right at the lower level of the magic fib box. Right there, which is a 61% retracement. And it's just holding right there. It could blow through that, but yeah, it looks interesting. It looks like earnings are out of the way. You know, and when if you're ever in, you know, wondering about that, go over to the intraday chart, and most of this loss that's been taking place today, well, actually, it started yesterday. I don't know if they had earnings. 25th after market. So they had it here on Wednesday, the 25th. Sold off, came back up, partly filled, actually did fill the gap down, or gap up, and then started selling off from there. So it sold off pretty well after earnings. And so you want to know a little trick to watch is when you get a big sell-off like this, look for the half back. In other words, it'll move back up to about half of what it dropped. And then if the bears are going to come back and take over, the sellers are going to come back, that's approximately where they would take over. Same thing works when I've got a significant move to the upside. Watch for a pullback of about 50%. We know that. The only problem is we know it, but we fail oftentimes to take advantage of it. PSP, PSP. Yeah, this doesn't have the kind of volume I would want to be taking a look at. Susan, I mean, it's less than 100,000 shares per day. And so what did as possible STOs going, huh? And WFC for selling calls. I'm going to watch WFC simply because it has had a nice little move up. If you own the stock, yeah, it's where you would want to be selling calls because we're at the top of the extremes on a Keltner channel on a daily basis. But if you look over here on a weekly basis, it looks like it still has a ways to go. And it has just started into this nice uptrend. Now, darn it. Basically just started up into this really nice little uptrend down here at 50. Looks like it may run all the way up to about the 66 level. Pretty nice looking chart. I'm going to look at that. I'll look at that a little bit later if it's of interest. That may fold out on one of the other watch lists. And then last but not least, we'll look at TQQ. Okay, Mark, here's what I've been looking for on, let's see, is it Mark? Yeah, on TQQ. One, we've got a really nice move down, nice pullback move. It is, you know, at this point, the uptrend, remember, the uptrend is not in jeopardy as of this time. We still have a really nice uptrend, but we know we're getting a pullback into support somewhere. Now, where's support? Is it going to be at the 60 level? Is it going to be slightly below that? And this is where you can throw your fibs on here. Oops. There you go. Let's throw our fibs on there. Blow this up. And so as you see, it is bouncing right at the 50% retracement. It may get down to the 618. That's where the 50-day moving average is. So that is a pretty nice looking place. What I see right here, and people will not, oftentimes not wait. TSI pointing down. No attempt to turn back up. TSI weekly chart rolling over. Double top at that with a slight. And so I would look for that to continue down. Intraday, yeah, you're getting a little bit of TSI down here on an hourly chart. May bounce up, but where might it bounce to? Well, a couple of ways you can do that. Let's get rid of this fib. Remove. And let's go over and let's build a fib over here. A new fib box over here tells us that if we get a half-back retracement, where's it going to go to? Well, it's going to come back up to about 65.29. But then I would look for a a rollover at that point, and a continue back down to the downside. That corresponds with past resistance or past support. So as once broken, support becomes resistance, and so that's part of the thought I would do on that. As far as when to get long the entity, because definitely we want to play it to the upside, is wait for us to TSI to get closer to the lower reversal or support here at the 0 line and a reversal candle. That's very simple. Wait for TSI, wait for a reversal candle at a strong support level. So 3 entities, and that'll keep us out of a lot of trouble when it comes to our trading requirements. So, okay, my friends, I am going to basically call it a day. We covered a lot more stuff today than we normally do, but I hope you found it rewarding. And again, it's always a pleasure to be able to chat with everybody. And I will send out that ebook with you when I send out the email once I get everything posted. And so for those of you who are premium members, we'll do the final hour next, starting at the top of the hour. And not a lot to be done on that, simply because next week is the Fed. So I don't like to be real heavy into anything going into the Fed. And so with that, aloha, and have a great weekend. Trade well and prosper. God bless everybody.